Welcome to Markets Now. I'm Michelle Rook along with DuWayne Bosse with Bolt Marketing. Seeing mixed trade in grains and hogs. We're lower in the cattle market and specifically in the grains. DuWayne, we do have corn and wheat higher today in corn. What do you think? A negative report for corn yesterday. We've kind of bounced. Is it just because wheat's higher, or what do you make of it?
I think mostly because wheat's higher. Boy, when it comes to the corn market, it's not fun to listen to me because I'm a horrible bear. And yesterday's report didn't help my attitude there. We got the lower yield that the bulls wanted, but production actually increased due to those higher acres. So I look at corn and the ending stock and the fact that USDA didn't trim demand, and I think they're going to have to trim demand in the future. I think that ending stock gets even bigger than the 2.2. I'm at like a 2.5 billion. So I'm horribly bearish the corn market. Now, we did hit that support level, right? Yesterday, we hit contract lows and bounced off. So your technical buyers like to buy that because they don't write where to put a stop at. Wheat had the bullish report. Some talk that wheat made a significant low. And if wheat did, then that will help support corn. So honestly, I think corn's bouncing just because of wheat.
Okay, so do you think, though, moving forward, that yield will go down in corn or keep going down from September to October? Is that maybe another argument that could be made?
Usually USDA follows the trend when it comes to yield. So I could say that with it being down for the last several months, it probably continues. Usually small crops get a little smaller, but I really need to advise, this was a big report for the USDA as far as production wise and the yield forecasts. I would even tell the bulls that are out there saying the crop isn't there, use what USDA printed yesterday and go with it. If it does, Michelle, keep going lower, I think it's small increments. I don't think it's a big deal. You do have your bad spots out there, no doubt, but there's also some pretty good spots. And this yield is already 8 bushels per acre below a trend. So there better be some disaster spots out there to pull the average down.
Gotcha. And what about the wheat market? Do you believe that we did, off those reversals, put a bottom in at least Chicago and Kansas City? I don't know that we had a reversal in Minneapolis, but certainly some strong action.
Some strong action, and trade action is probably more important than any fundamental news that we read. Honestly, I've learned that the last couple of years to watch that, and that's helped. I'm worried that's not the bottom in wheat, and here's why. Now, global stocks are down. The stocks usage is down, sharply near record lows. So it tells me that we should be at a near low. But the problem I have is the funds have made a ton of money in wheat by selling it lately, the past several months. And when they sell the market and make money, they have more money in their margin account to just continue to sell it. And I think they keep pressing the issue until something scares them enough to out of their short positions. Now, it could be a violent trade, but I don't think we got that scare anywhere in the world right now that we're running out of wheat that's going to make them get out of short positions. And with the carry in the market, Michelle, they may stay short and just roll to the next contract every month and just stay short this wheat market, which will really hold it down all winter long.
Yeah, that's a good point you make about the specs and their action. I wondered if part of yesterday wasn't the 7 million metric ton drop in global stocks, but more the fact that we were just pretty oversold, weren't we?
That's another great point. We're just horribly oversold. So probably just a bounce until we see continued buying and start looking at some retracement levels. Right now, it's just a technical bounce, which I get it. Every market bottoms with a technical correction first. But until I see continued buying, it looks like just a technical oversold bounce to me.
Yeah. So we talk about reaction or hangover from the WASDE report, and for soybeans, 220 million bushel ending stocks figure in its own right is a pretty low number, but it just wasn't bullish enough to keep the bulls fed, or what?
I guess I like the report when it comes to soybeans. Anytime you're under 240 million bushels for an ending stock, USDA doesn't want to print something below that. We've seen that at least in the past several years. They don't like to go below that. It causes some demand rationing and markets get a little crazy. So 220 is historically very tight. Now, but like you said, the trade action was horrible. And that, like I mentioned earlier, is to me more important than the fundamental news, at least in the short term. The trade action tells me, yes, we know we're going to be tight by next summer, but harvest is about to begin. We're not going to run out of supplies anytime soon. The trade action tells me we've got to go down, establish a harvest low, and then let's see how demand is going through the winter and fall months and see obviously how the Brazil crop will be coming, that they'll be starting planting here pretty soon.
Well, and that's a good point you make because demand was lowered by 45 million bushels. And so that was a negative for the market. And what we're thinking that South America is just going to basically price us out. And so that's trend's going to continue or what?
I suppose that's kind of what the bears are thinking. We got to remember Argentina had a crop disaster last year. Now, USDA is forecasting a 20 million metric ton increase in Argentina's crop size, which honestly just puts it back up to normal. It's not like it's going to have a bumper record crop. Brazil, the problem there is they're just expanding so many acres. You got to start with a pretty high number right away for them as well. And the bears are somewhat right. We're crazy tight in the U.S., but the global stocks for soybeans aren't unbelievably tight because we assume this big crop bounce back from Argentina. We'll see. You pretty much close the weather market for the U.S. and I got to open it up and start watching weather in South America, which is a little annoying to be honest with you. But that's a global trade we're in nowadays. So yeah, all eyes on South America.
Yeah, and that bigger Argentina crop may be why we saw such a slam down on both yesterday and today's action in the soybean meal market. So that's a really good point that you make. Where do you find support here now in the November soybeans since we've taken out some key areas?
Yeah, I tried looking at that a little bit yesterday. If the trade is trying to make a harvest low, where's it going to come in at? And where should we look to lift some hedges? And my thoughts were anywhere from 1280 to 1330, which we're not that far from that, to start lifting hedges. Soybean, because of that 220 million bushel ending stock, should have good support. Now, if the funds want to get out of long positions and just sell this market, they have more power than I do, right? So they could push it to 1250, but at that level, I think I started actually looking to possibly buy, especially we're going to have to keep a weather premium in this market until the South America crop is in the bin.
And one more follow up, yield, does it go up or down in the next report?
Oh boy, for soybeans, let's inch it down just a little bit lower because of the way the weather finished late August here. But it's so hard to say. But yeah, let's go with a little bit lower.
That's right. Cattle market. Pull back here today, is that just correcting an overbought status, or is that maybe some negative reaction to this hotter than expected CPI number this morning?
I think it's probably just the overbought conditions here. Really nice run up last week in cattle and to start this week that really came out of nowhere, you could say. I mean, I didn't have cash cattle news sharply higher in general. I think it was you that had mentioned that the South was higher than the North, or South was higher week over week. So that's a positive. But cutouts were down, which, grilling season kind of ends now. So I understand that too. Demand is still very strong though. But so what I'm trying to say is the fundamentals were a little bit bearish, but boy, the futures market just took off. And I think it got a little overextended yesterday. Looks like a little bit of a short-term top in a bullish market. So I'm not saying I'm bearish the market. I'm just bearish short term. I think we have a nice little correction again. A nice, healthy, bullish market will do that. So I wouldn't be too alarmed. It looks unbelievably strong.
Yeah, that's been our MO doing, isn't it? We go up into new highs, we take a little correction, then go back up there and just grind. I mean, those are nice bull markets, aren't they?
They really are. And I love it. And I hope it keeps going. The problem I've had with the cattle market is getting up to these new all-time highs. I'm bullish the market because of the tight supplies. Everyone else is bullish. The chart looks good, but Michelle, we're dealing with values that are so high and so much risk out there for guys. We're starting to at least look at maybe some put options, some more LRP insurance. And I mention it every week, and then I don't go out and buy much of it because it seems like we're going to go higher the next week. So, but we are getting the levels, especially like next year's calves, August of 2024, very high levels there. It's a bull market, but maybe some put options, maybe some protection for some guys. Not a bad idea with this much capital investment.
Okay, just a quick question on hogs. I don't want to belabor it, but that market's been pretty hard to trade here, hasn't it, lately?
It has.
Not that it always isn't, but
right. No, yeah, exactly right. No, the hog market lately has had, cutouts have been up a little bit. Cash has been up, actually looks fairly strong. So this recent rally is totally justified, but you're right. It is a hard market to trade. Now it looks like about like the cattle, maybe made a bit of a short-term top, and it trades very technically. The chart-driven traders kind of own that market, and they kind of own the cattle market too. So even if you're not a chart guy, if you want to trade hogs, you better become a chart guy.
Yeah, no doubt. All right. Thanks for joining us. DuWayne Bosse with Bolt Marketing. That's Markets Now.